Hello, ladies and gentlemen. Welcome back after your lunch. Hope you enjoyed it and managed to get something to eat. Welcome back to Energy Tech Challenges Finals. Excited? Yeah, okay. Before we continue, I'm going to repeat the rules of the competition. Each company has 3 minutes to present. Then the jury has 2 minutes to ask questions. I'll let every contestant know when time is running out. Okay? So on that note, let's open our next track, Climate Fintech Pitches. As I mentioned earlier, we're lucky to have many, many experts on our panel of juries today, on the judges. So, as I asked earlier, when you ask questions, can you please introduce yourselves to the speakers? Appreciate your cooperation. So, round of applause for our first presenter, Mr. Salvador Carrillo, co-founder at Alta 5. Remember, you have 3 minutes. The stage is yours. Good luck.
Okay, thank you very much. As I have 3 minutes, don't clap yet. So basically, we are all aware that a lot of capital needs to be deployed for achieving the energy transition. And fortunately, you have a lot of institutional investors willing to invest in this hot topic. And proof of that is we have a lot of venture capitals, but also this deployment of capital had to face several challenges. The main one is that banks will be able to absorb just up to 60% of their financing needs. There is no standardized solutions, and there is also a very fragmented market in the energy transition because you have different technologies, wind, solar, storage now, with different sponsors, mid-market, large sponsors. So basically, Alta 5, what we founded in 2020 was an institutional platform to invest in green energy assets. What we did is basically to digitize all the processes so the sponsors can upload their projects. We also can originate digitally through AI. Basically, we map every single solar or wind project in Spain, and we can make automatically which is the best financial structure if you are looking for financing or for acquisition. We have more than 100 investors, and basically we look for the best investors that fits with the investment, if it's financing or it's a capital investment. And the investor also, they can access not only to the opportunities, they can monitor the financial ratios of each investment, and furthermore, every single ESG ratios. From a standpoint, so the value proposition is very simple in terms that from a single point, the sponsors can access to a multiple capital sources that basically fit their capital needs. And from investor side, the institutional investor can access to a free curated deal flow with a standardized process of documentation. We have 5 verticals. We have deployed in the last 2 years more than 100 million euros in utility scale. We have just launched Bold, a program for financing storage across Europe. We closed our first transaction in Italy. Also, we have just raised 25 million euros there, backed by the European Investment Fund to provide self-consumption financing lines for installers. And also, we are launching an e-mobility. So this is basically our business model is very simple. So we take a commission for each closing. Also in the debt, we take a commission for every year of financing. Currently, we have more than 600 million euros in the platform in opportunities and in distribution. And we have invested more than 130 million euros. We are expanding operations and technology in across Europe. We are right now in Spain and Italy, but we are expanding to other geographies. And our ambition basically is to become the largest investment platform for green energy assets. Thank you very much.
Thank you very much. Jury, you have 2 minutes for your questions.
Yes.
Hi, Dominic from Forward Ventures. Thanks for the pitch. Since you've issued so much volume already, could you spare a few words what sort of the net yield for your investors is after loss experience, and what the fully loaded cost of capital for your project is, including your fee structure?
Yes, we have, at the end of the day, we have several kind of investors. We have banks, which cost us capital. For example, we have several banks across the world, but they cannot access to opportunities in Spain, but they want to invest in Spain and financing in Spain. So for them, it's a way to access the market and to compete, for example, with a Spanish bank. Same in Italy. We have, Japanese banks or German banks willing to invest in Italy, and we provide them with origination. At the end of the day, they are able to remove part of their fees, of the cost of capital, to give to the platform, because at the end of the day, we are providing the value by originating a curated deal flow. So we are also saving a lot of resources for the origination teams.
What would be the average cost of capital for your projects?
It depends, because you have one of the things is it's a very complex market, and we are trying to do this because you have, for example, if you are a bank, you can finance, for example, at with a credit margin between 1.5 and 3%. Is very variable. If you are a renewable energy fund, you need more spread, so maybe you will have 4%, 5%. But on the opposite, you will have more flexibility with the sponsor.
How do you assess the quality of the projects in the platform? For instance, if they have the authorization or not?
We don't take investment decisions, but basically what we do is a pre-screening of the projects. And basically in the platform, we see that the project is real, there's a sponsor before to upload the opportunity and to distribute among the investors, has experience, has track record, and we check that the permitting is okay. But finally, before any investment, there is a due diligence, technical due diligence, insurance due diligence, and financial due diligence, and legal due diligence.
Many thanks. Many thank you. No more time, sorry. Thank you. Next up is Nicolas Bodek Rivera Torres, co-founder and CEO at Bono. Maybe you have 3 minutes. The stage is yours. Good luck.
Thank you very much. Hello, I'm Nico, co-founder and CEO of Bono, the platform that analyzes, connects, and finances industrial decarbonization. We're seeking to accelerate decarbonization in industry because it represents 70% of the global carbon footprint. And according to the World Resources Institute, between 75 and 90% of the emissions come from the supply chain. But there are no reliable data, and at the same time, the success of the decarbonization goals of large companies like you guys depend on your suppliers measuring and reducing their emissions as well. That's why we want to take them to net zero, which by definition means a 90% reduction of their emissions and a maximum 10% compensation through offsets. But net zero does not only depend on industry. We have identified that there are 3 key players in the decarbonization ecosystem: industry, sustainable technologies, and financial institutions. The main challenge industry faces today is the pressure to decarbonize their emissions, coupled with lack of knowledge and lack of budget for decarbonization, while sustainable technology companies have low closing rates because their customers' main purchase incentive is savings. And finally, financial institutions have pressure to decarbonize their portfolios, but face huge greenwashing risks due to lack of traceability and transparency of the use of the resources. That's why we built Bono, the platform that analyzes, connects, and finances industrial decarbonization. With our enterprise license, companies are able to send service to their suppliers, understanding the level of maturity and categorizing them by that level of maturity, collecting first-hand data, while aligning your goals and tracking their progress through our admin panel. This way, industry leaders are able to ignite the decarbonization chain and promote sustainability within their suppliers. But what information are the suppliers going to give us if they haven't even measured their footprint yet? That's why we created the starters and the pro licenses for companies that are just starting out or are ready to take it to the next level. With these licenses, our customers will be able to measure their emissions in an easy, fast, and accessible way, find areas of opportunity, and create both goals and a decarbonization roadmap. Here, we attack their main areas of opportunity being the knowledge barrier and the accessibility. Later on, in our marketplace, they can quote and hire the solutions they actually need to meet those goals, like electrification, energy efficiency, or renewable energy, for example. Here, we help the sustainable technology companies increase their closing rates because our customers have an additional purchase incentive. They want to also reduce emissions apart from the savings. Finally, once we have a baseline of the emissions and a technical quotation for each of the projects in the market, in the roadmap, we connect them to the financing they need to make it happen. And here we help financial institutions reduce their greenwashing risks because we give them transparency and traceability of the use of the resources and the impact. We're a passionate, committed, and experienced team, not only in sustainability, but also in the technology that pushes us forward. We have 92 users in 7 countries in Latin America. We have measured over 500,000 tons of CO2 and generated a bootstrapped revenue of over $150,000 with only an initial investment of $3,000. I'd like to close with this quote by Larry Fink saying that every company and every industry will be transformed by the transition to a net zero world. The question is, will you lead or will you be led? Thank you so much.
Thank you for your presentation. Jury, you have 2 minutes for questions.
Great pitch, thank you, and a really important topic. I'm Melanie from EIVEE New Ventures. You're talking about the calculation of the carbon footprint. How does that work, and where do you get, or the customers get the data from? Is it rather a spend-based approach or activity-based, and how granular is the data set?
Yeah, that's a great question. Actually, we use the GHG protocol, which is the largest methodology for carbon accounting in the world. The customers can use both, either consumption data, energy bills, consumption fuels receipts or invoices, or we can also use spend-based emission factors to calculate those consumptions they don't really track right now. But of course, every year they robust their inventories and make it better.
Thank you.
Could you talk about the actions that have been taken by your customers and what sort of outcomes have been achieved?
Yeah, sure. So right now we've been 2 years in the market. We have some big customers, which the ones we are piloting. Of course, it takes time for a company to start measuring their emissions and actually start executing the projects in their roadmap. Right now, we have a first batch of 20 providers from the EIVEE InBev supply chain in 7 countries of Latin America. And with them, we are already starting to do some RFPs for PPAs in renewable energy in the Mexican energy market. Also some solars on site for Peru and Ecuador. So we're starting with those easy to tackle projects, renewable energy and efficiency, but we also have some other types of solutions. For example, nature-based solutions, softwares for agriculture, for logistics. So we have a lot of easy-to-do solutions, as well as some more complicated ones like electrifications of boilers or furnaces.
Thank you for the pitch, first of all. My name is Maciej Lehmann from Future Energy Ventures. I wanted to ask about the business model and how you price the service to your customers.
Sure, so we have 3 revenue streams. We have the SaaS for the license, for you to measure your emissions. Then we have a success fee for every project in the marketplace and a broker fee for the financing. Right now we have bootstrapped so far. We will probably raise a round later this year once we prove some hypotheses, but that's basically it.
Thank you very much.
Thank you very much. Have a great day.
Next up is Christopher Thorsell, Chief Strategy Officer at EIVEE. Remember, you have 3 minutes, sir.
Great.
Good luck.
A lot. Hi, everyone. My name is Christopher. I'm the Chief Strategy Officer at EIVEE. At EIVEE, we help companies unlock accurate carbon accounting through supply chain transparency. So climate change is a supply chain challenge. More than 90% of emissions come from the supply chain. But when companies turn to the suppliers to get emission data, less than 2% of them can actually deliver data. The good thing is that data is actually available. However, only 10% of companies know where to find it across the very complicated data landscape, to treat it and to use it for carbon accounting. That's what we do at EIVEE. We help companies to unlock accurate carbon accounting through supply chain transparency. And actually, supply chain transparency is 90% of doing carbon accounting. To map the different data sources, to treat it in a way that actually use it for the last 10% of actually calculating the emissions. But 10% is, or the current players in the market is actually only focusing on the 10% of the problem, actually calculating emissions. But then the burden is on the companies where they ask, what data should I upload from what data sources in what format? So that's what we do. We help companies create that supply chain transparency. So we look at the different data sources that we have, everything from financial data to production data to waste management. Then we connect it into our platform, which then cleans the data, aggregate it, enrich it, and categorize all the data and the suppliers. But also that we recognize that all companies are different. So we have experts sitting and validating our platform's output to get to the highest possible accuracy. And when this is all set up in an implementation phase, then is highly automated when doing recurring updates. When we have mapped the supply chain, then it's quite easy for us to do the last 10%, which is the others are doing. So we take the very granular transaction data and link it to the most precise emission factor. And that creates some of the most accurate calculations in the market. This also enables us to go all the way down to a product level, which means that we can actually give customers an overview of the emissions per product, but also per raw material. And this they can use to develop more sustainable products. They can reduce emission where it matters, and they can actually share this data with their customers. We have a twofold go-to-market strategy. So we have our direct sales, which is focusing on manufacturing companies, because that's where they are sitting on very granular data on a raw material level, which means we can do product emissions for them. On the other side, we're doing partnerships. We just announced a partnership with a leading Nordic bank called Danske Bank, where they're referring their business customers to us to help them on their sustainability journey. We have a quite experienced team in place, which is very deep in supply chain and sustainability, which we believe can take EIVEE to the next level. Thank you very much.
Thank you. Jury, you have 2 minutes for your questions.
Thank you for the pitch. The carbon accounting space, it's quite competitive because you showed also a couple of the logos. So how I understood how you differentiate is by helping companies to actually provide the baseline ones, which data to use. And I'm wondering, is that more of a one-time consulting effort, or is that a recurring business that allows you for a recurring defensibility against the other competitors?
Yeah, good question. So we have an implementation phase of 6 to 8 weeks where we map the entire data landscape of the customer. So you can say part of that is partly expert-driven, so consultancy-driven, and our platform. And then once that is set up and we have the data structure in place, then it's highly automated, can be done in a few hours.
What about the IT landscape of your customers? Does your system integrate with them, or is it a standalone solution?
Yeah, so in the implementation phase where we map the entire data landscape, after mapping and deciding on what specific data points we need, then we integrate into those systems so the updates will be automatic.
Last question? Anybody? Okay. Oh, last one.
Thanks for the pitch. Could you talk a bit about your monetization model?
Sorry, what?
How you monetize your product?
Oh, yeah, of course. So everything is monetized through a subscription model, so a yearly subscription fee, also the entire implementation process.
Thank you.
Thank you very much. Next up is Dr. Christopher Cormack, Managing Director at Quant Foundry Limited.
Thank you very much.
Remember, you have 3 minutes.
Cheers. Thank you, everybody. Hopefully you can hear me quite well. So we're Quant Foundry. We are based in London, and we're in the RegTech space in terms of assessing climate risk. So there's a demand from the banks, the asset managers, to really delve into companies to understand the risks to transition from projections of supply and demand across the various technologies and services, but also the deep understanding of physical risks. And one of our innovations back in 2019 was to build a model that integrated these risks. So we were formed in 2018. 2019, we actually seized upon a problem and we came up with an innovation. And through that innovation, we actually published that when I was a research fellow at Imperial, to actually get an idea out there to help formulate ideas. There was an ideas vacuum at this point of how to embed these externalities of physical risk as well as transition risks. And through that process, from the very early prototype, we engaged LGIM as part of their TCFD process, where we saw off what is now McKinsey's solution. And through that process, we accelerated in terms of our capability and our knowledge through into 2020 to look at building AI. And in 22, we developed the capability to actually scale up with a partner. So Bloomberg, the BNEF team, recognized our model and provided us with their data that's not even available in the terminal, to actually scale up our capability where we can handle 50,000 companies with good data quality. And now we're in the process of ramping up and accelerating with our business partners to actually integrate physical risks. So we've worked with a downscaled weather modeling team to actually integrate with our deep financial model our capability. So in summary, our model typically looks at corporations where we embed the complexities of these downscaled physical risks, policy risks that are going to influence supply and demand, as well as changes in technologies, and we look at a detailed model of that corporation in terms of its balance sheet, but we take it further and look at market impacts. And this is the critical step, whereby you're able to assess probabilities of default, loss given default, impacts to equity growth, potential returns. So we look not just at the fundamentals, but also directly at the financials. So the business model going forward is to deliver data-rich analytics from our unique capability, direct software licensing, as well as the consultative services. So we anticipate a reasonably large segment. We're targeting 300 clients by the end of 2007. We're already revenue positive. We've hit $1 million revenue over the past couple of years and profit. So we bootstrapped, but we want to accelerate with our partner. Our business model and our ask is essentially to drive investment of 3 million going forward to accelerate our software provision.
I have to stop you there, I'm afraid. Thank you very much.
Thank you very much.
Jury, it's your time for questions. You have 2 minutes.
Hi, can I just ask, as sort of related to your last slide, as you moved beyond the banks into selling physical climate risk, where do you see that market at the moment, and what's the predominant use case? Is it still around reporting, or are corporates really?
So initially things like TCFD process, for example, was about reporting and sort of high-level sort of scorecarding almost of risks. We're now getting to the stage where people really do care about the depth of these risks and try to understand the economic value of mitigating those risks and strategies around mitigation, whether that's insurance technologies or specific project finance, where they delve into the depths of saying, well, we forecast over the next 25 years that there's a probability that your physical infrastructure will be destroyed, and maybe that probability, that frequency is twice as high. And so your capex expenditure, suddenly makes that project unviable. And so you're looking at different solutions. So there's that deep desire to look at very asset specific, but also more generic risks. So for example, the housing sector, to what extent do you provide lending? To what extent do you encourage reinsurance markets, for example? Do you adapt? Do you encourage government policy, for example, to change, to force these things? So the physical risk space is evolving, going from scoring to deep risk quantitative analytics.
Can you share some insights or the results you got from the POC that you mentioned with Bloomberg?
Yeah, so the POC was largely about scale, and the challenge there was how much data can we assimilate into our model framework. Our model framework is designed to be extremely granular, to capture details of cost down to the asset level and to aggregate. Now the challenge is always data availability when you have that framework, but our principle of our model was to provide that depth of analytics, but our architecture design has this concept of scale or resolution, if you like, of data. So you can have granular data, but that can sit alongside less granular data. And the challenge is to fuse that, to come up with a meaningful response. And that's a combination of not just the software, but also the interpretation of the analytics, to identify those gaps that are partly driven by the data, but also the richness of information where you can get hold of it. And it drives the agenda of driving greater data and really quantifying that. So the POC was a big challenge, because we were given the challenge of doing everything with data that even Bloomberg's not even selling on its terminal. It's like on a spreadsheet, literally, it's like that. And we got to the point where we got something out, and we're still in conversation with Bloomberg. I know the head of their climate risk methodology to be determined. However, we are striking deals with tier 1 banks. So.
Sorry, thank you very much.
So.
Thank you for your presentation. Next up is Gabriel Umana, Head of Commercial at Renewabl Limited. Remember, you have 3 minutes.
Absolutely.
Good luck.
Thank you so much. Okay, I'm here to present you Renewabl. We are revolutionizing the way companies are compensating their carbon emissions with renewable energy certificates. Now, let me tell you something that probably is going to impress you, and it's like nearly all companies will miss their net zero goals without at least doubling the rate of carbon emissions reductions by 2030. Not only this is a problem, but also according to RepRisk, more than 40% of the companies are greenwashing on the way and the amount of renewable energy they are consuming. So this is quite big numbers, and today's challenges are pretty clear. What are the ways that companies, corporates can consume renewable energy or can say that they are consuming renewable energy? First, a PPA. Second, they choose a green tariff by the utility they have. Or third, they buy unbundled RECs, GOs, or RIGOs. What are the problems with these three solutions? First, they are complex. Second, most of them are not compliant. They could be not transparent. Also, they could be not accessible. And they are time-consuming for corporates. So what do we have here? We bring to the market a marketplace for companies to meet their decarbonization targets. How do we do it? We focus on four things. First, we allow companies to buy now 24/7 hourly certificates. Second, we allow corporates and sellers to put certificates in the market and to buy certificates from the market with the geolocation and technology preference. Third, we give the corporates the trade and trace they want to have in the market and that they do not have right now. And fourth, we produce reports for CDP and SBTi. So, how do we do it? We focus on three activities. First, we measure. So many companies out there in the market are only focusing on measuring. Corporates that come into our marketplace can do the measure. How do they do it? They can measure their currently hourly score by integrating their PPAs, their green tariffs they have with their utilities, and the unbundled EACs they have right now, and we can tell them, okay, you are 60, 70, 25% carbon-free energy score. And at the end, they are the ones that are choosing the route to market to achieve 100% renewable. Second, they are allowed to transact in our marketplace. So now they can choose certificates, guarantees of origin, nowadays that are hourly. And they can choose the location and they can choose the technology. Also, it's a very useful tool to do local swaps. Third, they also verify and report. No more greenwashing. We give a ledger traceability so that they know where the energy is coming from and compliant reporting. We're talking about a market size that is growing at 24.7% every year. We're talking about 186 billion, and where we are, it's already onboarding sellers. The future focus is compute industry, PPA management, and hydrogen certification. And the current opportunity that I'm bringing into the market right now is we're raising our seed round of 3 million, which is currently oversubscribed, but happy to discuss with anyone the opportunity. Thank you so much.
Thank you very much. Members of jury, you have 2 minutes for your questions.
Just to clarify on the business model, the marketplace, are you also selling the platform to the utilities so that they can issue these real-time RECs? Is that the other side of the marketplace effect?
Exactly. So I focus first on, or probably you saw more on the buyer side, but this is also very useful for the sellers because this marketplace will allow them to price a certificate at each hour of the day differently. Nowadays, how it works is that utilities, they price their guarantees of origin the same, and this is not kind of fostering more battery storage. It's not fostering many like wind farms that they could get a higher revenue for having a guarantee of origin at 2 a.m. in the morning. So our marketplace will allow also utilities and also sellers and developers and IPPs to price the guarantees of origin at different price every hour. So by the end, what happens is, for example, a data center could come into the marketplace and it's not going to pay the same for a guarantee of origin at 2 a.m. than what it's paying at noon. And according to Aurora report released a couple of weeks ago, a utility can get 30% more value if they do it on an hourly basis rather than on a monthly basis, or on a monthly basis.
Hi, thanks for the pitch. Could you talk about what sort of solutions are you replacing and how the competitive landscape looks like?
Absolutely. So nowadays, how the corporates can do it is they go through a broker or through a trader to buy guarantees of origin, right? So what they do it is like usually how companies are working, and now it's changing because now they have a lot of kind of backlash for greenwash, but what they do it before was like, okay, I have 100 gigawatt hours that I consume every month or every year. I go and buy guarantees of origin. I don't care where they come from. So what do? I buy hydro, for example, for Norway, that is very, very cheap. And at the end, they go out and say, okay, my beer runs 100% renewable energy. When you do the match, it's actually not true. So what we are replacing is the brokers and traders in the market that are charging 20, 30%. Actually, Renewabl is only charging per transaction. So all the other things that you see, we don't charge, and we charge 7.5%. So we are seeing also a very competitive against what the market offers right now, because the market is not transparent, it's not traceable, and it's not fostering new technologies as we are doing right now. Thank you.
Time's over, sorry. Thank you very much for the presentation. Unfortunately, we have no more speakers for this particular round, but we have a very last round of pitches at 3 o'clock, so we have a small break for you. Remember to come back to see the last of these fantastic ideas. Do remember you have some extra time to think, and we'll have more speakers later for you to vote on. Okay? Thank you very much. See you shortly.